Chapter 4, Internal Control. Focus on cash. Before you proceed, you want to verify that your general ledger trial balance from Chapter 3 is accurate. So, to verify that, on Reports and Forms, click General Ledger, double-click General Ledger Trial Balance, and select the specific date of December 31 of last year. And click OK at the bottom. Once you have verified the individual account balances, then you should be comfortable to move on to Chapter 4. The emphasis on this chapter is the internal accounting controls to protect assets through reliable and accurate accounting records. Safeguarding the company assets is important, and well maintained and well defined coordinated measures with proper accountability and authorization in compliance with generally accepted accounting principles is very important. The internal control of cash receipts and cash disbursements is vital and requires efficient operational methods and proper authorization to achieve accurate accounting records and financial statements. As you read the chapter, you will understand the focus and the need in preparing the bank reconciliation and how to record the establishment and replenishment of petty cash. So you can close off of this screen what is petty cash. It is set up to facilitate small disbursements or payments of cash. Working on problem 4-2, you are to record establishment of petty cash. Read and understand the illustration given in the chapter. You will notice that there is only one journal entry required to establish or set up petty cash. Since you are recording a journal entry, follow the same steps on task. Click General Journal Entry, enter the transaction date of December 30, and then just like you did in Chapter 2, you will be recording debits and credits. On the GL account, it is a debit to the petty cash account, which means you are actually increasing that petty cash. On description, you can say to establish petty cash and enter the $300 amount under the debit column. And your credit will be your regular checking account, which is your cash account. And that is also for the same amount, enter it in as a credit. Remember to save this transaction to complete the posting process. Now you want to work on problem 4-3. It says that the petty cash custodian shows a cash count of $14.50 and included in the petty cash box are vouchers and receipts as follows: stamps for $37, receipts for computer repairs for $50, and office supplies for $123.50, and a signed voucher from the owner representing personal use of $75. The total amount of the check issued to replenish petty cash is $285.50, and you are asked to record this. The first thing you want to determine is whether the custodian has the exact amount of cash count left after adding all the receipts and vouchers for the total amount of $300. Since the amount of the check to replenish petty cash is $285.50 and the cash count is $14.50, you can therefore conclude that petty cash count is in balance and with no overage or shortage. Therefore, to record the replenishment of petty cash, you want to classify the receipts accordingly and as close to the accounts for which they are used. So for the stamps receipt, the proper account name to use is postage and delivery expense, and the other receipts are well defined. Since there are several accounts used in this one journal entry, you will record a compound entry. So you are debiting the postage and delivery expense to replenish petty cash, and the dollar amount is $37 for this first debit. You have another debit, and that represents the computer repairs, and you want to use the repairs expense account. So that will be the account to select for $50. Another debit is to office supplies, and applying the principle of consistency in chapter 2 we have been recording all our purchases to the office supplies asset account. You want to debit the office supplies for your purchases of $123.50. And finally, you have the last voucher representing the owner's personal use, and that will represent your owner's draw account, and that would represent the $75 debit to that account. The total of all these debits is the exact amount of the check you need to replenish petty cash, which will be a credit to the cash account. Remember, not petty cash, but to the general cash account. You want to save this to complete the posting process. Refer to the discussions and illustrations of the petty cash to determine if there are shortages and overage. Those illustrations in the chapter will help you in your midterm and final exams. Working on problem 4-4, it requires more attention and understanding. You are provided with the Bank of America statement for December 31. Just like any bank statement, it contains the beginning and ending balances and the list of deposits and checks that have been paid. Also provided are information regarding NSF or non-sufficient funds and bank service charges. Reading information number 1, given the NSF check, you are to record a journal entry to reflect $974.36 that was taken out of your account because the check that was paid to you by your patient, Marjorie Williams, did not clear when you deposited it. So the journal entry is to debit the accounts receivable, and that you will want to collect from your patient, Marjorie Williams. So you're debiting the asset account receivable. And your description will be to record an NSF check for the amount of $974.36. And the credit to that, remember, would be coming out of your regular cash account, so your credit will be to your cash account for the same amount of $974.36. Don't forget to save this to complete the posting process. Now, Peachtree or Sage 50 software may have a version wherein you do not need to make journal entries for bank service charges and interest income. But this illustration, Sage 50 software did not provide us a cell to enter those service charges, so you will need to record a journal entry for that. The bank statement shows $22 in service charge, so on the GL, debit bank service charge expense, and on description you can enter to record bank service charges for the $22, and the credit would be coming out of your regular checking account, which is your cash account, for the same amount of $22. Don't forget to save this to complete the posting process. Now, information number 2, you are to change the accounting period to show your month and year being reconciled. Remember, when you created your company in Chapter 1, Sage 50 indicated that it uses a 12-month period and there will always be 2 years or 24 months period showing for reconciliation. To do this process, you go to Task and you want to click at the bottom of the screen. There is the System and you want to click the accounting period, changing the accounting period to period 12. That is December 1st to December 31. Once you click that, click OK. It will prompt you whether you want to print your report. Say no, and it will prompt you again for an internal accounting review. Say no. This is a good feature of Sage 50 for real business world users of this software. You are now ready to reconcile your cash account. On number 3, it says on Task, you want to click your account reconciliation. On Account to Reconcile, you wanted to click your cash account 1001 and it will appear and show the checks and deposits made during the month that were found in the general ledger of cash. You want to enter the bank's ending balance showing, and that is for 170,654 and 44 cents at the bottom left of your screen. Moving along, looking at the bank statement given in this chapter, you are to compare the deposits and other credits from the bank statement with the deposit / bank credit column and click to mark with a check under the status column on the far left of the screen. Only the amounts showing in the bank statement. Reading and understanding the chapter, you will note that there will be deposits in transits that will appear in the general ledger but does not appear in the bank statement. A good reason for that is because of the timeliness on the bank side when the deposits were made by your company versus the bank verifying and posting those deposits, especially if they occur during the end of the month and over the weekends and holidays. Therefore, those deposits in transit will appear in the next month's bank statement. So verifying the deposits, mark the deposit amounts appear in the bank statement. A few, I will show a couple of them, like you want to mark the $200,000 and the $10,500, and you will mark all the rest that you see in your bank statement in the chapter. Once you have marked all the deposits and other credits from the bank statement, you will now focus on the checks that have cleared the bank from the bank statement. You will also mark the box under the status column of all the checks found in the bank statement as you see them under the check / bank debit of your general ledger. Note and observe that the bank statement arranges the checks in numerical order and show the dates of those checks when they cleared the bank. But those checks may not necessarily be the same date that you wrote your check. So focus on the check number and the dollar amount because you may have the same dollar amount but different check number since the payee's name does not appear in the bank statement. So your control for accuracy will be the check number and the dollar amount. I will mark a few of this, like check number 100 for 36,000 has been paid and check number 101 for 3,000 has been paid, and so forth. Observe that the checks that the company had written and found in the general ledger, some of them may not appear in the bank statements. These checks are outstanding checks, meaning they have not been presented to the bank for payment. Some of these outstanding checks may appear in the next month's statement. Finally, be sure to also mark $22 service charge and the $974.36 NSF charge at the bottom. The reconciling difference at the lower portion of the screen must be 0. Remember to enter your ending balance of 170,654.